Welcome everybody, Doug McKay, anti-wallstreetguy.com on the 29th of July, 2011. Closed on the S&P today. We bounced right off the 200-day moving average, off the lows. We closed at 1292 and change. We also bounced off the 200-day moving average basically twice in June. I believe, in a sentence, the overall trend right now, the way we see it technically, is down, but I anticipate a bounce next week. Regardless of what comes out of Washington Sunday, Monday, or Tuesday, we are clearly oversold here. The area that we wanted to hold, which would have increased the probability of punching out of this basing pattern that we've been in for essentially 6 or 7 months now, was to get above 1345, 1350. We had a signal to buy last week when we closed above this downward sloping trend line. We closed above the 50-day, the 30-day, and the 20-day. That obviously has since rolled over. Again, our area of concern was if we broke 1320, then we thought 1300 would have been a target after that. That was the case yesterday. We did bounce off the 200-day moving average today. So obviously technical analysis is working here. Where would we get long again? Again, we anticipate a bounce. The big question is whether or not that bounce will be sold, faded. I would see us getting long 100% if we got above this 1345, 1350 level. Again, we're only going to hit resistance so many times. We're going to go through it. At the same time, we're only going to hit support so many times, and we're going to break through it. So, again, the big question is whether or not this bounce that we anticipate next week will be sold. I think it will. But again, we're going to trade the tape. If it's not, and we chop sideways, and we hold the 200-day, we eventually get above 1345, 1350, we will get long again. Let's take a look at the S&P 500. I'm sorry, the SPY as well. And let's take a look at the SPY chart on a weekly basis. Now, the closer we get on multiple occasions to this downward sloping trend line, almost a symmetrical triangle, if you will, the odds are we're going to break above it and we're going to get long. That looked like the case, but so far that is held as a top. We are now at the lower end of that kind of sideways pennant here. We definitely want to hold the lows that we put in this week, and we for sure want to hold the lows that were put in on the first week of July. All right. I believe if we break that, just common sense from a technical standpoint, as a technician, we're looking at 120. If 120 doesn't hold, then we're looking at basically 115 in that area. In other words, 1200, 1150 on the S&P cash. I, for the umpteenth time, have said that I believe we're going to see that at some point this year, because we really haven't seen a significant sell-off in the last 2.5 years. However, like I've said before, it's quite possible that we're going to punch out to new 2.5, 3-year highs ahead of that. If that's the case, we have to get on board. So when we look at the SPY, this is kind of the line that would turn us bullish again on the SPY. But again, as it stands right now, we just don't know how high this bounce is going to take us. I believe there's a lot of uncertainty, but again, it's pointless to try to follow the news and trade off the news. What you want to do is look at a chart and let the charts dictate what you're going to do. This is a bigger picture of a chart that we sent out to our subscribers, where we talked about a multiple bottom on the short ETF, the inverse ETF SH. Again, that just coincides with basically a topping formation in the SPY. And again, we could still call this a head and shoulders. Here's your left shoulder, here's your head, here's your right shoulder. So we'll see you guys. Again, I think we'll get a bounce next week, but we'd really have to see us eventually chug our way up through 1345, 1350 to really think that this is a market that's going to go higher. Let's take a look at gold. Let's take a look at gold. We can look at it certainly on a weekly basis. We have a weekly chart up right now. Anything that we look at on a weekly basis or a daily basis, we want to wait till it comes into a base and then breaks out of a base. And then we want to put our stop underneath that base. that's the simplest way to maneuver through this from a technical standpoint with any chart. Let's take a look at gold here. If you wanted to get long here, again, this is always easy in hindsight, but you would get long as it came out of the base. You could see it was basing here for 3 or 4 days and then broke out. But if you would have got long here and it broke down, you would have been out kind of in this area. So that's what we want to look at. When we look at a chart like Apple, which we have still a select number of managed accounts that have this stock, we did, however, sell some the other day, I believe, in this area. In reference to, the reason we did that is because of this gap. And also we're looking at potentially a mini head and shoulders pattern. This would be your left shoulder here. This would be your head. This would be your right shoulder. I have no problem getting long this stock again for 2 reasons. Number one, obviously fundamentally it's a good stock, but more importantly, technically we've come into this base. If we get above certain areas here of resistance, let's say maybe a little bit of a shot here above the high that was put in yesterday, Thursday, around 396. Certainly if we got above this area here of 400 again, I would get long Apple. And that's assuming this holds here. We could have our stop, basically 3-4% back. My concern here is this gap. So we'll see what happens with Apple. Same thing goes for a high flyer like Netflix. Again, a chart is a chart is a chart. It did pull back into a base. I would probably want to see it get above at least this high, possibly even this high, and then I would have my stop right under the low here. But for right now, be careful chasing stocks, any positions, wait till they pull into a base. And if you're going to try to pick off the bottom, let's say you're looking at some bank stocks or a bank ETF like the XLF, make sure that you have a stop in place. Many of you are asking me about getting short now. And again, if you're going to do it, let's have a stop in place in case the bid is hit for the next several weeks and we go up through 2.5, 3-year highs. This is a position we did put on as an example in the managed accounts. This is triple short the Russell, and obviously it's an inverse ETF. We did buy this at the open, and that was on Wednesday the 7th. We bought it right here, but I have since moved the stop up basically 2.5% above our entry here. The managed accounts that we have, you guys, today did finish in the black, barely, but they were in the black. We still have a long position, very limited long position in the Vanguard Total Market Index. The reason for that is we anticipate a bounce. That bounce is also the reason that we have a stop on the TZA. But the main reason the managed accounts were in the black today, even though everybody thought treasuries were going to go in the toilet or anything tied to treasuries, is because of our position in the AGG, the Barclays Aggregate Bond ETF. This again was a nice chart. It was kind of the cup and handle thing, cup here, handle here. You want to make sure it holds this basing pattern. It popped out of the base today on decent volume, up 0.60%. A couple other bond ETFs that we follow throughout the week. Big move today in the TLT and also the IEF. That's actually a very big move, 1.21%. But again, very similar pattern, kind of a cupping pattern here, handle. Into the handle, you kind of want to see a decrease in volume and then break out on higher volume. The bottom line is if these fail and they break down, our stop is very close from a percentage basis. If we take a look at silver, again, this chart right now is long, but we did anticipate some selling at 40.42, and that was back basically in the first 2 weeks of May. Be careful here when you're playing silver here. As always, you'd want to have your stop in place. We did have a limited number of clients in this position here, and this is the First Majestic Silver Corp. And as you can see, our stop there is very, very close at 22.07. to lock in a profit. All right, you guys, the overall trend right now. Let's take a look at the SPY again on a weekly basis. The overall trend right now is short, which is down. That does not mean to go out and sell everything. That basically means to have a stop in place, or if you're going to get short this market, have a stop in as well. We do anticipate a bounce next week, but we think that's going to be sold. We'd want to be kind of sitting mostly in cash until things work themselves out technically, where we get above 1345, 1350 on the S&P cash. All right, you guys, that's at Doug McKay, antiwallstreetguy.com. We'll see you next week. Doug McKay, 7/31/2011. The overall trend right now is short. Thanks.